I cannot stress enough how important relationship building is in an industry where this is not only, your house, your home, your American dream. This is life. Like, this is out there and this is happening. Wire fraud is a real thing, and they are targeting title companies because it's the most money transacted over a wire than any other industry out right now.
What's the 5 Ps? Do you remember it?
Proper preparation prevents poor performance.
There you go. It doesn't matter how much money we get. If we don't close, it's no money, right? So no close is no money. I'm everything that I am because of my dad's death. And I wouldn't be as successful without his death.
Hello and welcome to the Jason Theory. We're going to have an interesting conversation about stuff that a lot of you don't know, but you pay for it every time you close. So if you're paying thousands of dollars for something, you should know what it is, and that is title insurance. I'm here with Dru from Inspired Title. Dru, just tell us a little bit about yourself, and let's get right into what people don't know that they should know.
That's a very interesting introduction, and I appreciate that. I'm the guy who you pay for things that you don't know why. We are a full-service title company. We service Indiana, Illinois, licensed to do business in both those states. What is title insurance, and why do people have it, and why do people need it? We're obviously going to dive deep into that, and I'm pretty excited about that. So go ahead and give me your why. Give me your why.
So I always, when we had a great discussion about a ton of things before we got on the mics.
Yeah.
And whenever someone gets their closing disclosure, the first thing they say to me is, what is title insurance?
Right.
And I always say I said, you're paying for that 1 in a million thing that could take you out.
Yeah.
And I always tell obviously we're talking about you're in construction and this and that. One of the biggest things about title insurance is obviously when you're buying new construction, these builders have contractors that they owe money to.
Right.
And you want to make sure that title company says, hey, no one, as a lawyer back in the day, Tom Moore is like a world, Tom Moore, zoning board, this and that. The first time he said to me, he's explained to a person, you just don't want somebody knocking on your door and saying, hey, you owe me $2,000 for this fridge,
right,
or you owe me $100 for this or that. And title insurance makes sure that what you're buying is yours. That was his simple explanation.
Yeah.
But why don't you dive a little bit more into it?
For sure. And again, thanks for taking some time and having me out here today. I think that the simplest way that we can talk about this and put this is, it's an insurance that is unlike any other insurance. The easiest way, best way to describe it is, if you think about insurance, you're buying it to protect you from things that are going to happen going forward. Okay? Car insurance, if you get into an accident down the road. Homeowners insurance, if there's some damage to your house. Title insurance is insuring the ownership of that property from the day that you own it, the day that you close on it, before. So it goes backwards.
Yeah, I've never heard of that way. That's great. Yeah, it's backwards insurance.
Everything, exactly. So it's also different in the sense that you're not paying it monthly. You pay it one time. So the fee and the cost of it, when you look at it in perspective of all the other insurances, you're paying for, monthly, and you're going to pay for it with the assumption that something might happen. Title insurance, you're paying for it to say something didn't happen. Up till this point, everything's been free and clear. There is no liens or encumbrances on my property. So title insurance is that product that says you now, Jason, are the rightful owner of that property that you just bought.
So when you guys do what's called the title search,
correct.
So the title search basically says, here is the past history of the property.
That's literally what this is, yes.
How does then something get through that title and that title search where oh my God, I need to file a claim? I have a great example, but I want to hear examples that have happened to you where you're or how does that, sure. Let's rewind. How does that happen?
Sure. So what we've done is I kind of simplified to say we report the news. We do what is called that title search, and we let the parties know, buyer, seller, attorneys, everything that happened on that property, to the point where before we get to closing, there's some things that we need to deal with. There's some items on here that have to be taken care of. obviously we know you're going to pay off the prior mortgage from the previous owner. If there's a tax lien on there, that's got to be dealt with. If there's an IRS lien, if there's a judgment, if there are mechanics liens, which you were speaking about earlier, and mechanics liens are just liens that are put on by contractors because they didn't get paid. These things pop up at different times throughout the process of time, and they can really impede the ability to sell that property. So our process of going through and, lining this all out to say, here are all the things that have happened on your property since the beginning of time. And if it's clean, if there's no big issues, you're good to go. But how does a mechanics lien pop up? How does a tax lien pop up? How do delinquent taxes? Well, easily don't pay your taxes, don't pay the IRS, and don't pay your builder. And they have a right to go ahead and file a claim or file a lien against your property to do exactly what we're talking about here. Stop and make somebody look at it so it can get dealt with, so they can get paid. Okay, now we take a risk through the process that by us saying, hey, I'm selling you my property, I'm giving this to you free and clear. So if somebody comes knocking at the door and saying, so my dad died and my brother and sister sold the house, but I'm also an heir, so they didn't include me, so I own 1/3 of this house now too. And now you got to deal with that. And so we're reporting all the news so that the attorneys and even the seller, for that matter, can recollect things that have maybe happened in their lives as to what has gone on with that property. And that example of death is one of the bigger things, or divorce. In a divorce situation, husband and wife get divorced.
I'm in one of those right now. It's a mess.
It is a disaster.
It's a mess.
They're not going to play nice in the sandbox.
No.
So it's, getting them to sign off or deed the property to the other, or maybe the divorce decree says that you have to sell the property and half the proceeds go to your spouse, your ex-spouse. So if that's not done correctly, or if those items are not done through the measures that the court indicated, we are really involved in the whole process of, what people don't know about, and what people they just know it's part of this. So we're at the end of the day, when you leave, you just bought a $500,000 house. The last thing you want to think about is having somebody knock at your door and ask the question of saying, there's reason to believe that you don't really own it because, and they give reasons. Then they would file a claim, and then it becomes that's what the title insurance policy would pay out on, is that claim.
Yeah, that's I think people need to understand that too. It's like when you buy that property and there could be a lien, or as people say, clouded title.
Mm-hmm.
So whenever the cloud, just think about title and cloud, you can't see.
Correct.
So whenever there's clouded title, the title insurance company will take a look at that and say, and they'll do an evaluation.
Right.
Hey, we think there's a case here,
right,
or we don't, or this or that. And then you guys, I see it, you guys put your initials on the title and you insure over that issue.
Right.
So when that buyer goes home, if there is an issue in the future from something they know about, they know that they're covered by you. We've insured it. We're telling you that, don't worry, you sleep well. We're going to handle that if anything ever comes up.
Right.
I normally get those on boundary disputes.
Yeah.
And fences and the title
Encroachments,
company.
sure.
Yeah. We're insure over it.
Right.
We'll insure over this. We'll insure over this. I got something right now where this is interesting. They were not married.
Okay.
She basically paid for the house.
Mm-hmm.
They broke up.
Mm-hmm.
She sold the house, and he's suing her for ownership in the house because he lived there for a couple years.
Homestead rights.
Yeah.
Mm-hmm.
But they were never married, and all the money came from her.
Right.
So the law, once anyone could sue anyone.
Oh yeah,
now,
for sure.
Now, does anything happen about it? But you can sue anybody, right? So the title company was like, well, there's a lawsuit pending on the ownership of this house.
Right.
We have the sale going here and there. So the title company is like, yeah, we will insure over this issue.
Mm-hmm.
However, we're going to want to hold X amount of proceeds from the sale, and we'll release the proceeds upon that. Now, the downside to the title company far exceeds the the proceeds that were kept.
For sure.
But they are evaluating the risk,
It's the risk.
and still wanting to get the deal done
Correct.
for the seller and the buyer.
And that's exactly what this is it's risk analysis to say, all right, hey, there's a mortgage that is 20 years old on there, but it's not been formally released. Okay, but several things have happened since that time. The likelihood of that still being in play is, minimal. However, it's still there.
Yeah.
Now, some companies will, they're going to go right by the book and go, well, it's out there. I want it released. And we're not going to close this deal until that mortgage of 20 years is released. I'm the guy that's going to look at that and go, there's 10 years left. It's a, $100,000 mortgage. So my risk is really only X. It's a number, right?
Yeah.
So, okay, we hold back a couple bucks, or we can actually formally release it as a title company because we feel confident enough and we've done our due diligence to say the legitimacy of that, or that our mortgage is no longer.
Yeah.
I'm not worried about it. So being a smaller company, we can take some of those risks and assess that. But what happens is the underwriter now is going to be aware of that to say, all right, Dru took that risk.
And the underwriter, just to explain to people, it's people that pay out the claim.
Like typically you'll hear, First American, Fidelity, Chicago Title, Stewart. These are the big guys in the area. We're underwritten by them, so we're an agent of them. Okay, so when they issue the policy, they're the ultimate company that is the insurer of if there's any claims in loss. We carry E&O insurance for these reasons as well, that if we make a mistake through the process,
E&O is errors and omissions.
Yeah, absolutely.
I know. I just make sure.
And no, that's good. I was going to get her there. So we then look at that and say, all right, there's a potential loss here. Our deductible on the E&O insurance is $10,000. All right, well, just pay it out because it's under $10,000. We're not going to exercise that option. So there's a lot of factors that come into assessing of the risk and determining whether or not these titled properties are insurable. And realistically, the processes that that it takes to get to that point, it's pretty standard and organized. I mean, every title insurance company does it the same way. It's the risk assessment is maybe done a little different, or the willingness to think outside the box and be creative, as opposed to giving the stock answer of saying, well, no, I need this to be cleared. But where the risk becomes, going back to your encroachments and things, if there's a fence that's on the other guy's property by a couple feet, it's a removable object. Like there's not a lot of loss there.
Yeah.
Right. So that's why it's easy to say, well, we'll insure over that if your neighbor's going to make a big stink out of it. Now, if your house is 4 feet on that guy's property, okay, that's not an easily removed item.
Yeah.
Right. So, or if it's encroaching on, how many people do you know that they use the easement of the backyard to be, that's part of my yard. And they fence it all the way to wherever it is, and then ComEd comes blowing through there and blasts out your fence and your pool and all these things, and they go, oh my God. You file a claim to the title insurance company, they're just say, hey, guess what? No. I mean, you encroached on the easement, the utility, and ComEd needed to get in there. Guess what? You lose. And that damage and all that stuff is a covered expense if it's talked about ahead of time.
So if they, let's just say, like, for instance, let's say you get the survey and that that person's encroaching on common space.
Correct.
Like, they fenced it and the survey shows it and it says there.
Mm-hmm.
Are there times where just the title company just forgets to look at the survey or doesn't see it and then just like signs the survey and say everything's good here? That would be that and then all of a sudden ComEd comes through.
Right.
That would be something that the underwriter would be like, okay, we need to cover this.
Right. So what happens in an instance of that, if we don't raise it on title as an exception of what they're being covered for, then it's assumed that it's been covered. So in that instance, if they don't see that there's anything noting that there's a fence that's encroaching on by so many feet, and ComEd does this, they have a rightful claim to say, hey, they cost me X amount of dollars. Then the underwriter, the title insurance company, is ultimately going to make the decision on paying that claim out. And more than likely, because it's not a big dollar amount, they would. but it goes as a blemish to us because we missed it in
and that your relationship with the
correct.
underwriter.
I mean, understand that misses in our business are not little.
Yeah, they're big.
If you miss a mortgage, and say, well, that mortgage from a couple years ago, you didn't raise it on title as an exception to have it dealt with by being released or whatnot. Now you're on the hook to releasing that mortgage for the number that it is. If it's a $100,000 mortgage, you as the title company now are responsible for that.
So would that be E&O on you, or is that because wouldn't the underwriter also need to check what you're doing? Is there a checks and balance
Sure.
even with them?
Sure. So in any time a claim would be filed, the underwriter would then notify us, and then they ask for our file, and we kind of go through the file, and they let us know as to what the claim is about. And if they see that we didn't raise the mortgage at all, or if we raised it and then we waived it, but we didn't have any supporting documentation as to why, like there's a release or it's being paid through closing, they're going to then come at us and say, that's your responsibility. The underwriter's not going to pay for it. So now it is on our E&O. Where it becomes that really nastiness is when the underwriter's out of pocket and they're going to go ahead and pay this claim. That's where it really jeopardizes your relationship with them. And they don't allow you a lot of those opportunities, meaning, because it's costing them money. I mean, Insurance companies aren't in the business to pay, as we well know.
Yes.
But when a title insurance company pays, it's not usually on little dollars. It's on big dollars because these things are big.
Have you seen title insurance fees? Like I know home insurance and this and that is doubled. Like, stuff that's happened in California and it's happened in Florida has killed the insurance market. A lot of insurers have gone actually under. They're stopping insuring certain things. Like, it's a whole to-do.
Right.
Have you seen that happen in title? Title's not really affected by fires and stuff like that. So has it been consistent, or are you seeing those price jumps just like everything else?
Not to the degree and to the level. And I'm glad you said, brought the home piece in there. We definitely have to clarify that this is not homeowners insurance. And if your house burns, you're not going to call the title.
Yeah, that's what I'm saying. So it's not, you're not affected by all this stuff that's been going on.
I'm ensuring that Jason owns that property because we've done the search to see that all the transfers and every conveyance has been done correctly. So the title insurance companies will, make increases maybe every 18 months or so, but they're so nominal. And as I said earlier, it's such a small percentage of what the, if it's a $500,000 house, if you're paying $5,000 for the closing costs, and they're divided between buyer and seller, and we can kind of, touch on a few of those items, but the policy is the biggest expense, which is the actual insurance policy. The other stuff is kind of, just the fees that go along with, closing and documentation and things. Illinois is not a regulated state. Indiana is. Illinois' insurance rates are, a third of what, so a $200,000 policy in Illinois is, call it around, $1,900. That same one in Indiana is less than $500. So
so it doubles.
It's less than $500.
Oh, less than $500.
Yeah, $500. Yeah. So I understand, a lot of people go, okay, well, Indiana's cheaper for everything, taxes, et cetera. It's true, but because it's a regulated state, whether you come to Inspired Title or you go to Chicago Title or you go to John Q. Public Title, the rate is the rate. What's the difference? Is maybe their closing fee, the things that they can actually, make a change on. But the title fees are regulated. Everything that pertains to a title fee, underwritten or determined by, the Bureau, they say this is what it is, it's a regulated state. Illinois is an attorney state, and that's a whole topic for another day. We can go down that path. But so understanding that the rates that you're paying for title insurance, they're not as impacted by the economy like normal insurance rates are.
Yeah.
We're affected by the economy as a whole in a different aspect.
So in terms of the attorneys, we'll just touch on that.
Sure.
So attorneys have relationships, they're agents. So you're an agent to be whatever, Fidelity or Chicago, whatever it is, right?
Yes.
Whatever people you're working with underwriting. Then the attorneys are agents to the title company.
That is correct.
So part of that title fee will also go does that title fee also go to the attorney, or is that?
Great question. So Illinois has been an attorney state since the beginning of time. What this ultimately means is, in Illinois, the seller's attorney dictates and picks the title company.
Yes.
So the seller's attorney says to their client, I have a relationship with Inspired Title, and that's where we're going to do this closing. Very, very infrequently is that argued to become, different. So because most people don't get it or care or understand, so yeah, whatever, right? So what that means now is they have a relationship with us that says, okay, we, Inspired Title, are going to be the servicer now to you, Mr. Attorney, for this transaction. So they're going to take a percentage, usually 85% of that policy fee. So the other 15 ultimately goes to the underwriter. So in a $2,000 example, right, $3,000 or $300 is going to the underwriter, and $1,700 is going to the attorney, on top of his attorney fees and anything else that he's doing. So they also get the.
But where's your piece?
Exactly. It's gotten now. So he just cut into what would be ours, right?
Yeah.
So we get like the closing fee because we're the servicing agent.
So the table fee.
So right. So whatever that closing fee is ours, plus maybe a few of the other little wire fees and things like that. But we still have to pay those. So that's where the title companies have been, really squeezed over the time, and there's been so many discussions about, getting rid of the attorney agent program because title companies aren't going to be able to survive, and we see that. I mean, the smaller guys get kind of sucked up by some of the bigger guys over the period of time, but ultimately that's just not going to change. But now there's a shift. Now they're starting to have realtors be agents of title companies. So there can only be one agent on the transaction. Okay. So now what does this do? This creates the war between the attorney and the realtor.
Why would the realtor want to be the agent of the title company? Just for the fee?
Yeah. Extra money. So
but that's not what they do.
The 3 to 5.
That seems like a disaster for the buyer.
Trust me, as the title guy sitting here across from you, going, think about the liability now. The liability with the realtor.
You're going to open yourself up for $1,000? No way.
The realtor's liability to me is substantially higher than the attorney who's got the degree and has something. Not that realtors don't have anything to lose, but he's got his law license that is, up against us.
Listen, you want to eliminate who can sue you.
Amen, man. Amen.
If you live in Illinois, it's like, how can I want to take, if there's 10 people that can sue me, how do I get it to 1?
But reality is the greed factor of what's going on.
That's crazy.
Is in there. So they're 3 to 5% or 6, whatever they're charging. That's not enough. So okay, I just made $8,000 or $10,000 on my commission. Now I'm going to get another $3,000 for the title fees as well.
So are they? We got to sit on this for a little bit. So are these people? Are these realtors then doing are they reviewing the CDs? Are they doing the tax prorations? What are they doing?
Are you asking me? So
I'm just wondering what they're doing to earn this fee.
Okay, so the answer to this question is that we've been instructed by the underwriter, by our by the title companies, to say, whether it be an attorney, whether it be a realtor, so whoever is collecting the fee and examining title is the responsible party. Okay, so yes, they're supposed to be examining the title. They're supposed to be determining insurability. I'll tell you factually, when this goes sideways, it's a lawsuit for everybody. So even though we didn't do it, but
can't you deny? Can't you say? Can't you deny? Can't you just I stay away from rentals. So somebody may ask me to do a rental.
Yeah.
Right. But all my lawsuits are rentals.
Correct.
It's 95% of all the lawsuits in real estate come from rentals because of how this
totally
state
believe
is
that.
Fucking done.
Yeah.
So can't you just say, listen, I don't want to open myself up for this lawsuit. You as a realtor cannot be an agent for this.
So
that's what I would say.
I didn't say that Inspired Title is supporting this. For that reason, I have chosen right now to not go down that path. 2 reasons. One, I have good relationships with the attorney. The minute I start bringing in some of the realtors to do it, even though it's not maybe on their deals, it sends them a message that's saying, I'm going to allow this, and they don't support it, so I don't want to offend them. However, the market is just so tough. It's so competitive. It's out there. It's happening. And come on. We know that there's no, kickbacks is a big thing. You can't do these things. I mean, I'm hearing stories, Jason, that I mean, thanks for sending my family to Hawaii. They're never going to get caught until there's a disgruntled person on the other end of that. That's a conversation I can come back and we can just literally dive into the intricacies of the agent program, because the liability is huge, but I think there's going to be a civil war between the attorneys and realtors as this thing continues to progress, because you can only have one. So now the attorney is going to go, all right, well, I'm not going to get the title fee anymore. So now he's going to charge $2,000 for his attorney fee, because so who's actually getting impacted by this? The buyers and sellers, right? So as much as we're trying to help the consumer, and that's always the talk, and I know that'll segue nicely into the other stuff we want to talk about, but that has always been the focus and concentration is the consumer. The minute you start to really put two of the professionals, at odds, you're just opening up a whole myriad of things, man.
I would never want to open myself up for that.
No.
There's enough lawsuits flying around as is.
You have to carry your own insurance because of the same reason, because now you're insuring that transaction. I mean, you're signing the commitment, you're signing the title. We're there to do some of the the work, but we're still now just the coordinator through this thing. We're still going to get the closing fee because we're still doing that part of it, but the actual agent and liability lies on whomever is the signer of that policy. And the underwriters are okay with it because they're allowing it, and they're aware of it, because again, we can't do it without them knowing. So
the underwriter is safe, right? If this person looks at the title policy, this agent looks at the title policy and signs it, and it says, hey, I agree with this title, doesn't that kind of...
Where's the claim going to start? The underwriter.
I know, but they're... Why would it go there when this person messed up?
So the claim starts with the the
and
underwriter.
They'll look at it and say, no, it's you.
Yeah, and they'll come back and say, hey, we got a claim on this, and here's what happened. Now, they're gonna... The underwriter has deeper pocket, so they're gonna get brought into it anyway.
Yeah.
So they're gonna have to defend.
They're gonna sue everybody.
I'm gonna get brought into it, even though I didn't sign anything. But I was on the transaction.
I've been part of lawsuits where the person's like, listen, if we're gonna sue one person,
take them all.
Take them all.
Right. Whoever's got the deepest pockets is gonna lose.
And I work for Berkshire.
Right. Right. So it's a reality.
Yeah.
So no,
some of the lawsuits are like, well, sometimes when I get when someone says something to me, like when I get drawn into something.
Yeah.
Like I got sued because the governor had the moratorium on evictions.
Oh yeah, right on.
And they're like, well, you brought us the renter, and then when the moratorium, when they said that you don't have to pay your rent, our person stopped paying. And I'm like, I didn't make that law.
Correct.
So I still had to defend myself. That's $5,000 for my E&O deductible. I went there. We had a great attorney, and we're on video, and the judge just looks at us and says, I don't know why you're here.
Right.
You can leave.
Right.
And I was like, all right, think that was $5,000 though.
Right. Yeah. No. Right. You can't get out from underneath that.
Yeah.
Right. No. It's
and like anyone could sue anyone for anything.
Anytime. Absolutely. So that's that my whole existence is based on that exact statement. Is taking risks I'm fine with, taking some chances and evaluating the risk, but the bigger piece is I want to stay out of court. I'm not gonna do a transaction that eventually this thing has too many ideas that this can go sideways, and I'm going to just get crushed.
Yeah.
So I don't want to bring in agents to have them as because they're flying around anyway. They're moving so fast. They're going to say, hey, go ahead and you guys do it, and now the onus is going to be back to us. Like, no, they want us to do all the work and then get paid for it. But then when the responsibility comes back, they're going to point a finger. So I'd rather deal with the attorney who's got the schooling and the financial backing of their law license and things to be a little bit more cautious.
I think another thing that you hit on that I always know is that whenever I talk to my attorneys, I'll be like, why do you use this title company, or why do you use this title company? And you hit on it a lot. And the main thing is the relationship that the title company has with the attorney they can talk over these items
Right.
and say, hey, listen, I know this is here. The attorney's like, but let's talk about this,
Right.
and get the title company to insure over it because I have a relationship,
Yeah.
which then benefits the buyer because now he has insurance
Yep.
over something that he is now not liable for. And I think that's the one thing that, like, it's not like a kickback, like you said, but everyone's trusting everyone because everyone has a relationship and knows,
Correct.
hey, I know that this attorney who I've known for 20 years and do all his deals, I know he's never going to screw me over.
Right.
So if he tells me that this is the story,
Yep.
that's the story. And I'm going to insure over it because I know that. And he wouldn't screw me over because I've done this for him. He knows I'll do it for him.
Totally.
And I know what he does for me. Like, we talked outside about the relationship aspect
Yep.
of things. And
Big piece.
yeah, it's a big piece. So like when people are working, when you're working with an attorney and you're like, okay, this guy's 900 and this guy's 500. And I say to my client, yeah, but this person has relationships.
Yeah.
I don't get into the title and this
Right.
and that, but you're paying for something other than just a paper pusher.
Right. We can sit down and have a conversation truly to say, all right, here's where you're exposed. Here's what I think. You guys make the decision. So we can have an educated conversation, kind of off the record before any decisions are made because we've developed a rapport and we both know that we're going to not lead each other down that path of trouble, right? So, and we can be creative and say, look, we can't do this, but how about these things?
Yeah.
Some people say, nope, we can't. It stops.
And if there's a mistake on the title, sometimes the attorney and the title agent can say, hey, listen, this is what it is. This is how it needs to be presented.
Right.
This is your best case for your insurance claim or
Right.
yada, yada, yada.
Yeah.
So there's a lot of behind the scenes stuff that people just really don't know about.
Right.
But that insurance, when you're paying that insurance, just know that you never need insurance till you need insurance.
Totally. That's literally one of the best things that somebody said to me is you don't need a title company until you need a title company.
Yeah. And then all of a sudden someone's knocking on your door
Right.
and you're like, oh my God.
And the horror stories are out there.
Yeah.
I mean, there's
Especially if you're buying new.
new construction opens up a lot of opportunities. If you're buying stuff that is being like foreclosed on or short sales, even tax sales. The tax sales laws have changed pretty drastically that indicates that just because there was a tax deed issued to an individual and then that individual goes ahead and sells it to a bona fide purchaser, if that tax sale was not done correctly and all the parties have been notified and everybody has been made aware that this thing went to tax sale, this thing can get unraveled. And now it's the guy who just ended up with the property may not really own it because, you forgot to notify this person, and they have a right still rightful ownership to that property. So now you got to unravel all of that, and these are out there. These are not just a conversation for the podcast. This is a reality that happens. If you look at a balance sheet from the underwriters, they are paying out on certainly they're making lots of money, but they do have loss.
So when you're saying, like, for someone that's looking for flips or foreclosures,
Sure.
what is the pitfall and that you find that title needs the underwriter sometimes needs to pay off?
Yeah, in a lot of cases with the flips and foreclosures are, looking back at that history to find out, what got it there first. We've since 2008 in the big 6, 7, 8 market. When you would say you're being foreclosed on, people would frown and look at you and go, "Oh my God, what did you do?" Now it's not as a bad thing. It's like, "Oh, you lost your job," and they can
Shit
equate it to
happens.
why, right?
Yeah.
Whereas before it's like you were a deadbeat and how the hell did you not pay your mortgage, idiot? But during that time, or now looking at this, there's reasons why these properties went into this distressed state. So researching that through the title exams and finding out all the paper trail of, okay, this has been done correctly. So to get it to a point to say now in this current flip process, because if you think about that market, it's an investor market.
Yeah.
It's, it's wholesalers. It's guys who are they're trying to make that quick buck. Well, immediately, we got to close this thing fast. Okay, we're not, because there's obviously a reason why you have to close this fast, because there's other things coming down the pipeline. So we're going to kind of, slow play this and look through it. But some of those things are, the ownership process, because you'll see a bunch of quitclaim deeds all over the place. A quitclaim deed, for just quick reference, is the least protected deed of transfer that's out there. I can quitclaim deed you the Sears Tower right now, and you can walk around and go, I have a deed that says I own the Sears Tower. Well, Dru never owned it, so I didn't give you anything. I legitimately gave you nothing. But the common person, they don't understand it to the degree that we do because we're in the business. So if you are quitclaimed the interest of that property, well, if that person who did it never really owned it right, or the process behind their ownership wasn't done correctly, then you don't own anything. So we're unraveling that stuff. And we've done many situations where now you got to go to a quiet title suit, which is literally a 8-9 month process to go in front of the judge to prove the fact that your ownership is correct based on these factors. So it takes time, costs a lot of money,
oh my Lord.
And
which judge has the time to do that?
I mean, literally, you are
in today's
presenting.
Day.
Yes, and it's an expense. But if you want it done right, that's what it's going to take to get it done. To say, no, I believe I'm the rightful owner because of all of these items, and we provide all of those items. But there's the liens that these villages and cities put on things are also seen in those distressed properties. You've got demolition liens, you've got weed cutting liens, and all of these ridiculousness.
Stairs are bad, windows are
because
broke.
they can. I mean, I've seen $10,000 weed cutting liens, and you're going, it's a 25 by 150 lot.
So what happens in that situation when the city has a lien? I mean, can you just insure over and say,
no,
F you? Like,
no.
How do you handle that?
No. So what has to be dealt with, in a lot of instances,
Do you negotiate?
You can't. In a lot of instances, the attorney is going to go ahead and try to negotiate that and say, hey, we're trying to get this thing back into a state of, get it back on the tax rolls, bring this thing back, so you'll get that revenue again.
Get money.
Right? So let's negotiate this ridiculous $10,000 tax lien because you just did it. There's no formula for why. It's just how they were feeling that day.
Yeah.
And it's also to make a statement because they got your attention and they know that we're not going to progress as the title company because there's a big number out there.
At some point they're going to get paid.
Right. I'm not going to fall on the sword for them.
Yeah.
So it could be paid through closing. We'll do a holdback and say while the attorney's negotiating it, the title company's going to hold that money, and hopefully it's less than the $10,000.
Yeah, that's how the lawsuit is. They're holding
right?
money.
Yeah. And that's been a very
He's suing
common
for a
practice.
ridiculous amount of money, and like enough lawyers told the title company, hey, at the most it's going to be this.
Right.
And then they held 3x
Exactly.
of what intelligent people said.
Yep.
Could possibly
You don't know
happen.
the time, you don't know the
Yeah.
interest, because now if all of a sudden you're ready to settle this,
But the
you don't have enough.
relationship with that attorney and that title company is literally how it got done.
That's exactly why it happens.
Yeah. If there was no relationship,
That deal's dead.
That deal's dead.
Right. And it's the creativity of the relationship coming together. And we do this all the time. And I'm often the one suggesting those ideas because, again, I want to see the deal done. I want people to, be the happy homeowner. There's ways to do it. There's workarounds that are within the law that are going to protect all the parties involved. And it's just kind of thinking, outside the box a little bit.
Yeah.
And, so there is a level of creativity that comes in it as well. It's insane.
What else do you want to tell us about title that I can't think of right now?
Well,
Since I'm not involved in the weeds. Something that would strike a chord.
I think knowing the risk factor that's out there as to, there's conversation or people might read. A perfect example, you get these advertisements for protect your title, closing lock, and all those things. It's virtually, I'm not going to say it's totally, it's virtually impossible for me to steal your title, for me to steal ownership in your title. So these companies that are out there with protect your
Safe life lock, safe lock.
Yeah, closing lock and title, like all these different
How could someone steal title?
Exactly right. Well, we know this because we're in the business, right? We understand.
But is there a
bit.
possibility?
Virtually impossible. That's what I said. They would have to fraudulently have deeds and conveyances signed that are
like in the past, right? Because
it could be current too.
You would follow before you transfer title, you'd be following. Well, hold up, what happened to Jason and Nikki? They owned this house,
right?
I don't see a sale,
right?
I don't see a quick. I don't see anything. So how
any
are
kind
you
of
now
transfer.
the owner?
So it's because they, draft up a document that is from Jason and Nikki to, Dru, and all of a sudden Dru's walking around going, I own your house. And you knock on somebody's door that is, easily influenced and say, this was signed over to me. Like, why are you in my house? And now what does that start? It starts the wheels moving and conversations happening. But realistically, you're going to dig and take a deep dive into that to find out that where was the fraud. But that's going to cost time and money. And why are people doing it? And why, it's the crime-ridden people. Why do people intercept emails and fraud the world? Right? I'll tell you this, to a point of what is an interesting story. We, as title companies, are the most preyed upon wire fraud.
I would say wire fraud, yeah.
Right? Because we're holding and transacting the most amount of money. And, you take, $500,000 wire that's coming in. I can tell you a story of my past that we had a cashier's check back in 2006 before they changed the laws to, anything over 50,000 had to be a wire, right? Indiana, it's everything over 10. So the lady brought in a cashier's check for $380,000, and she was basically a straw buyer when it all comes out. And in the end, realistically, that $380,000 cashier's check bounced. I found that out 3 days after, because it takes the bank a couple days to process it, right? This check looked remarkable. Deposited it into the bank. We paid off the lender. We paid off all these other liens. We exhausted the $380,000. My bank called me and said, Dru, we got a problem. That cashier's check bounced. And I'm like, shut up. The cashier's checks don't bounce. He goes, well, this one did. Cut to, oh my God, what do we do? You call the lender that you just paid off and say, hey, hold on. We already processed that. Sorry. Called, all the other, nope, sorry,
What happens then?
So we obviously filed a claim with our E&O. We called the FBI to, they came out and looked at everything. They brought the lady in and they, held her for a bit.
Found her?
Yeah, well, we knew she was there. She was at the closing, right?
Oh, it's true.
She didn't know it was a fraudulent.
Oh,
either.
she didn't know?
No, they gave it to her as the process of this, part of this whole scam. So they couldn't keep her.
Hope the bank gave it to her? How did she get
the
that?
client?
That she was buying for.
Mm-hmm. Yep.
Oh, that's right. She was a straw
Yep.
buyer.
So she comes in and buys this thing, and
Buying for someone else.
Yes, as a straw buyer. So ultimately, the FBI is like, it's $380,000. It's like there's not a lot we can do. I said, what's the dollar amount that you need to kind of engage to actually be proactive? And they said, well, that's not so much. It's trying to find the crime around it. I said, so if I shoot her, you're going to come after me, right? So there's 100% fact that you're going to do that. But she defrauds us $380,000, and we lost. I said, and that's okay? Like, there's no action to this? I had to get attorneys involved. We recouped about 250 of it. We lost 130 of it. But more importantly, what we can't measure is the relationships that we lost with, like, the banks, because that was a client of ours, and the other parties involved, and even the attorneys who were like, we dropped the ball. No, it's a fraud. Like, it happened, right? You can't measure this.
Yeah, and you can't hold yourself accountable to a criminal. Like,
no,
yeah,
totally.
I mean, like the one case the one case with the person that was in the apartment and stopped paying, we found out she was fraudulent, this and that, and it's like these people are good.
Yeah. Oh, no doubt. And I'll tell you,
people are good.
The benefit, and this is one thing that I say, I've spoken on this in many instances. So then they changed it to everything over 50,000. But the benefit of being a smaller family-owned title company is we know our people. Like, we're not doing a volume of business that we're just going, go.
Yeah.
We were able to we don't work with SunTrust Bank or SunTrust Bank. Sounds like SunTrust. We don't work with SunTrust Bank. That's a out-of-state bank. Like, we're able to see and we know our relationships. Yeah. We know our clients.
Is SunTrust still around? They were a big second home lender, and then just kind of...
No, but they were part of one of the that was what a lot of the wire fraud guys were using was SunTrust.
Yeah, they did all the seconds.
Yeah, totally.
between like 05 and 08.
And that's what crushed the market.
They were the piggyback loan.
My closer called me up and he's like, Dru, we got a problem. He goes, SunTrust, like our wire instructions were intercepted and changed in SunTrust, because we use SunTrust, which is a bank up in Northbrook, was changed, and like that money is scheduled to go there. Thankfully, we caught it beforehand, because again, we recognized it, we see it, we're like, we're able to kind of, so again, back to the relationship piece. I cannot stress enough how important relationship building is in an industry where this is not only, your house, your home, your American dream. This is life. Like, this is out there and this is happening. Wire fraud is a real thing, and they are targeting title companies because it's the most money transacted over a wire than any other industry out right now.
Yeah.
And like you said, they're so good at it.
They're good.
If these guys would put any effort into just, doing something positive, they're brilliant.
Yeah.
Right? So,
you get those phishing emails, right? And you're
it's insane.
You're like, oh.
Just one click and see ya. So, wire fraud is a real big thing in our industry, and we are protected. All the title companies are protected from that, but doesn't mean it's not going to happen. I mean, there are buyers and sellers sitting at closing tables going, money's not coming to our bank. Where is it? Well, we wired it. Okay, but it's not here. So now, you just lost your life savings, and you can't check. You lost your life savings. You also can't buy the house. Check.
Oh man.
I mean, so it's horrible.
Yeah.
It's one of the most gut wrenching feelings.
Those apps kind of help now, where you're putting that money into, and with Berkshire, we can't send wire instructions, right? So we send the email.
Yep.
The email then gets sent to the home office.
Yep.
The home office then sends an encrypted email.
Totally.
And we don't. No one. It's literally the buyer and the back office. That's it.
Yep. And it never was like this. I mean, come on. And we can go back enough time where we can say that I've done so many handshake deals where you just kind of go, you're going to do that, I'm going to do this, cool, boom, done, and we execute and we do it. It now, unless you're totally signed, sealed, and delivered in writing, everything is, it's just evolved to, this is what we have to do to do business now.
Yeah.
Just really protect yourself.
The computers. Yeah. I mean, it has. I still get the the Somalia, like,
oh yes,
king, and I'm like, and I always say if I'm getting this email once a week,
yep,
it's working.
Yep, it's efficient.
Yeah, because there's no reason anyone would send it if it didn't work.
Right.
But the new one I get now is that we've tapped your computer and we have your history for the last 4 months. We're gonna broadcast it.
Delete.
Yeah.
Right.
I'm like,
but flip
I
that.
usually email back and I'm like, have fun with it.
Exactly. Yeah. But you can flip that and go, hey, if it's working, this is a marketing thing. Like this is the consistency that we have to send for it to work, because they're doing it too, so they're marketing in a negative way.
Yeah.
If you can see that and it's capturing your attention, realize what that is and make it your own and create that same type of marketing.
Did you see the movie
strategy.
Catch Me If You Can?
Oh yeah,
that's when you said cashier's check, the first thing I thought about was that movie. I read the book first and I watched the movie.
Okay.
And I'm just like, man.
You've seen The Big Short, I'm sure.
Yes.
Yeah. I mean, that is literally what we both lived through.
Yeah.
In that process, and the we're just kind of sitting back going, okay, what's next? Like there's something up. It's going to happen. It's just finding out what is that next little, program, scam, whatever you want to call it, that they're going to direct and go. But the reason and need for title insurance is it's invaluable for the cost. It really is, based on some of these things we talked about today.
All right, we've spent a lot of time on title. I don't know where we are on time. I just want to dip into, for just 5 minutes.
Sure.
Really quick. We can have another one and dip into it more. But we had a good discussion about the NAR settlement, or actually proposed settlement, and people have talked about it ad nauseum.
Yeah.
And I think the only thing that we talked about is that when it's all said and done, it's the consumer that's really going to get hurt on this. And we both think, and I've communicated this to people that have always asked me, we both think eventually we're just going to come back to where we are now.
Yeah.
I mean, the buyer's agent was conceptualized. It was brought to protect the buyer,
right?
Because it was the Wild West, and it was like One of the main reasons I've never gotten into commercial is like, I don't want to swim with that. Like,
Sure.
I don't even want to be part of that.
Sure.
I think we'll get to that point, and I think it does revert back where people can be protected. And I think what's going to come about of it is what we talked about. There's just going to be a lot more, hey, this is what I do.
Right.
This is what the fee is.
Right.
And I don't think that's what the lawyers that fought this, they just wanted the money.
Right.
But I think the byproduct of that is you're going to have a lot more transparency.
Yeah.
And I think we, like, how we take for granted what we know about title.
Right.
And I think we, as real estate agents, title, we look and say, well, how did that person not know this?
Correct.
And I think it's really tough sometimes to separate yourself and say, listen, when that person got that, called up, hit that number on Zillow, and that Zillow person said, hey, you don't have to pay for us.
Right.
Like, I think then saying, hey, listen, you do pay for us because here's how. It's paid through the commission. There's the whole thing of price fixing is so insane to me because I'm not going to get into that. Like price fixing and monopoly, just everyone knows to have price fixing and have monopoly, you have to control the product.
Right.
Agents do not control the product. We're hired. The person that controls the product is the owner of the home.
Right.
And they make the decisions on what they want to pay and what they want to do. So there's no price fixing and there's no monopoly because by the definition of that, you don't own the product.
Right.
MLB, when they get hit, and basketball and football, when there's 25 or 30 owners that get together and say, we own the product and Barry Bonds cannot go in the hall or this guy can't coach. Right. That is a monopoly.
Right.
There's not 2 million homeowners getting together and saying, let's keep commissions at this so we can keep our prices up. All of that is BS. What is true is the transparency.
And I think to that point too, this summarizes it all the way down to the consumer doesn't necessarily need somebody else to speak on their behalf as much as we need to spend time educating them and really putting more of doing a better job at helping them understand that transparency.
Yeah.
They don't know what they don't know. So instead of just really making this big radical change, or so they think, maybe putting some time and effort into educating and breaking it down, simplifying it a little bit so that there isn't this ignorance of misunderstanding, because with that example, the product is the homeowner, right? They own the house, but they don't know the rightful ways and the options they even have, because they've developed it through our conversation today is all relationship based, right? They've known somebody or know somebody who knows somebody that brought them the realtor. That starts the process into, well, the realtor now has a relationship with an attorney. The attorney has a relationship with a title company, mortgage, all the way down. So it's all relationship based, but the homeowner still has no idea what any of those other parties are doing unless they've done it before or they're in the business. Now,
I can't. I mean, I just want to hit another point on that too, because we think we are talking about this, and then it's gonna be about 6-7 years ago, I was talking to somebody, and they hired a big broker who has a huge team, and things didn't work out with them, and the person made its way to me through whatever, and I'm talking to them. I said, well, didn't you know when you were talking to this guy? I go, did you ask him if he was going to show your house?
Right.
And the person looks at me and just says, I just assumed it was them.
Yeah.
And I was like, and then I sat back and I'm like, people just don't know.
They don't.
Like Sophia and I have this branded thing, and it's the 3 questions you have to ask that people don't ask. And like that brought it to me. And I was like, who's showing my house? Mm-hmm. Do you know the area? And how are you going to market my space individually to my space and not just throw it on the MLS and have your company
set it and forget it? Right.
And no one asks those things. And to me, I would be like, those are the first 3 things I would ask, because we know, right? So like when you look at this lawsuit, it's like, no one ever says, hey, when I pick up that lead and that buyer picks up the lead and says, how do you get paid?
Right.
Now, a lot of these people, as we talked about, because I was on those Zillow coaching, a lot of those people were coached, hey, You just say you're not paying for my services. And that's where it all started. We talked about it. The lead generation software and what's happened over the 10 years, this is the product of that. Of all these big teams saying, hey, you're not paying for it anyways, and here's your Uber driver. Sure. Enjoy.
Right.
Well, I thought I was hiring you with this, with this pedigree you have.
Yep.
No, you're not.
Yep.
You're talking to me, but you're going to get a minion.
Yep.
And I think that's how we got down this path, is people not being provided the service that they should get.
Assumed.
And if not being provided that service, tell them they're not going to get that service. That's it.
Yeah.
Like I said to you, you don't have to take a Lamborghini to the grocery store. You can walk, you can drive,
right.
You can skateboard. How do you want to get to where you want to get? As long as you know how you're getting there and what you're paying for.
Yes, that's so true. It's but they don't know the questions to ask unless they've been educated or told. Like you said, I know if you're going to call some other brokers after you leave here, ask them these 3 questions.
That's it. Ask them those questions,
right?
And then if you get an answer you don't understand, call me up.
Yeah.
If you get an answer you don't like, I'll be back in an hour.
But you might be doing something that's different than a lot of the other population in your business, because realistically, I think it's just that I know I need this, so therefore I'm going to let the professionals do their thing, and they become oblivious to it. And it's only a problem when it's a problem.
Yeah.
You only need title when you need title, right?
Yeah.
Exactly. So it circles all the way back as to, how much is too much? What do we, arm them with to give them some understanding and better feeling of the process? If I'm spending, $750,000 on a house, damn it, I want to know all the players of the game and what each role is. And if it's not you and somebody else shows up, somebody better have an explanation as to why.
But that's the thing. People just were like, okay,
right.
That's insane to me.
I think that's it. It's expected, or they don't know it should be different. We do because we're so in it. We're so ingrained in it. We're too close to it. That's, I think, what's hard to really establish.
And it's really interesting. It's like all my clients that are over 40, that let's say are over 45, that were before the computers took over.
Yeah.
They all they understand it. Oh, this is my agent. He does this. He does this. She does this. She does
Totally.
this. It's when we got to that computer age where no one wants to see anyone. No one wants to talk to anyone. That's where people were like, oh, I don't have to tell this person that I'm actually being paid by the selling broker.
Right on.
I can just say, when everyone asks me how you get paid, I'm like, well, the selling broker has a deal with the seller.
Right.
The seller pays the brokerage house.
Correct.
The brokerage house then turns around and pays me. That's how I get paid.
Right.
But people don't have that conversation because it didn't go along with lead gen.
Yeah.
That's my 2 cents on
Yeah.
it.
No, I don't think it's wrong. And I think it'll be interesting to see how this shakes out, how long it's going to last. There's obviously many more conversations that are going to be had around this topic. I'm sure there's going to be different deals and arrangements and things all set up. But as we talked earlier, maybe the best interest right now is to just represent sellers. Just kind of, let the dust settle, man, and going to go see where this is at. But I think it's going to impact the market for sure, with just the consumer. I mean, forget about us in the industry. I'm interested to see what it does to the consumer, because here again, they don't know everything you just spoke about.
So I think all those people that were not over disclosing, those people are out.
Yeah.
And I think you're left with really good people.
Yeah. I mean, I hope that's
my
the hope. Yeah, that's the hope for sure. But what, reality?
No.
We'll see. Stay tuned. It'll be interesting. Yeah.
Well, this is an awesome conversation. I really appreciate it.
Man, I appreciate it.
Do you want to give people,
have
your podcast, you have
absolutely.
whatever you want to throw out now to the audience.
Absolutely. Thank you again for taking some time to have me here today. Inspired Title. We are, you can find us on the web at inspired-title.com. You can certainly contact me, Dru, D-R-U, at inspired-title.com. You can call us at 708-598-5084. We're on all the social channels, LinkedIn, and
what's your socials? It's just inspired
it's inspired-title.com. We're Instagram and LinkedIn, as well as Facebook.
And
too.
the podcast?
And the podcast is called The Closing Table. We do it every other Thursday. It's about a 45-minute. We have guests on there that are industry professionals. We talk a little bit about title, kind of giving you guys some, some common words and verbs in conversation around that. And then we talk about our philanthropy piece, which we're very big into giving into the community as well. We're doing a lot of philanthropic stuff as well, so it's pretty fun.
It is, other than your down payment, it's the most expensive thing you're paying for.
No doubt.
So you should really...
No doubt.
I'm glad people, I think, now have an idea of what it is.
Yeah.
And hopefully you never have to make a claim.
Oh, no doubt, no doubt. And like I said, we can dive into some other stuff on another day with all the stuff, because there's many different topics in this circle that I think people need to know and hear more about for sure.
Awesome.
Yeah.
All right, thanks so much, guys. Enjoy, and we'll see you after this next pod. Thanks.
Thank you.